Good morning and welcome to Markets Now. I'm Michelle Rook along with Allison Thompson from the Money Farm. We're seeing a lot of red except for cattle futures this morning. And we kind of have that risk off from last week continuing over here in the grains this morning, Allison.
Yeah, I think we do. Lots of uncertainty. We got a lot more moving parts again this week. The Fed will come out with their interest rate announcement on Wednesday. We also have some questions still regarding the Black Sea export deal. And then, of course, we have some meetings with some big leaders in China, Russia, Brazil, and Ukraine this week. So there's nothing short of some uncertainty in the week ahead, which obviously keeps adding to some of the risk off mode here in grains.
Yeah, and you could really tell where the funds were long or short in the grain market last week just by the weekly closes and the action that we saw.
Yeah, that's true, but unfortunately we didn't get our commitment to traders report on Friday, so we're still not caught up to know exactly where they are. But at this point, I think everyone's fairly confident in their estimates that they're continuing to get out of their longs and possibly adding some short positions here. So as far as that goes, and it's going to continue that way, hopefully we just get caught up on those reports here soon.
Yeah, especially I think they're still long in probably soybeans and the meal market. And the concern there is I think we've taken out like the 100-day moving average in soybeans now and are kind of pushing to some new lows, at least for this market year, this calendar year.
Yeah, we have been on the bean side, and we've also seen soy meal continue to go too. And that was our concern to start with. I mean, meal was really the strong one that kept soybeans strong when we saw the sell-off in both corn and wheat markets. And now that soy meal is starting to turn, it's going to be taking soybeans with it. So I think that's part of the reason we're seeing the sell-off there. And a lot of it just has to do with South America's crop. Brazil's harvesting, which still is expected to be a record crop, and they're crushing and offering soybeans at a low price right now. So it's not helping out U.S. prices right now. So yeah, as long as that continues, yeah, I think soy meal is going to be the leader to the downside. And until that turns, unfortunately, I think soybeans are going to go with it.
And you mentioned pressure here and maybe corn and wheat because of the Black Sea grain deal. Talk a little bit about that. If that's the reason why we're seeing this pressure, and how long is this thing actually going to be extended? Because we're hearing and seeing a lot of different things.
Yeah, no kidding. Honestly, we don't know a whole lot more than we did when we finished last week, but we do know that we did hit that expiration deadline, and it's still open. So we're hearing different time frames, just like we were last week. Russia is saying that it's for 60 days, while Ukraine and the UN and Turkey are saying it's 120. So I guess we'll find out in 60 days whether it is a 60-day agreement or if it's going to be more than that, or what's going to be going on with that agreement. But no doubt that this is something that we're probably going to be dealing with for a while. It's not going to be going away. So I think the market's just trying to find a new norm of it all, even with the uncertainty that clearly is going to be remaining for a while.
Yeah, I think that's a good way to put it, a new norm. The other big headline last week was all this China business, about 83 million bushels of corn that they bought. Do you anticipate they'll be back in buying any more corn or any other commodities of ours this week?
It would be good to see. And this morning, unfortunately, we didn't get any new export sales. So it doesn't help matters either for starting out the week on the futures side. But typically, I do see China pick up some corn from last week, which kind of spurred the global market.
Continue to watch that. Cattle market back up this morning. We had pressure last week due to the macroeconomic uncertainty report, and some of the numbers were at least constructive that we'll be able to rebound here at all or not.
Well, hopefully we do get a little bit cattle side. But again, it really goes back to just like grains. It depends what outside markets decide to do this week. We've had a lot of influence there, and obviously that's not going to be going away. But it's good to see a little bit of a boost on the numbers here this morning. Some of the sell-off, even on the hog side, a lot of it's going to be technical in nature too. So we do see a little bit of a boost there too.
Yeah, and today, if you're not seeing some cattle hog spread unwinding, I know that's been kind of a common thing here recently, but the hogs have pushed down so far. We have taken out so many layers of support. You just wonder, where are we going to stop this thing?
Yeah, and it's just like grains. Once that kind of selling starts, it's really hard to find a new bottom, and it just adds to fear, and it adds on top of itself. So yeah, they definitely have gone a little bit further than I think anyone was expecting on a correction to the downside. But at least at this point, when you're looking at it technically, and I do think a lot of this was technical in nature on the sell-off, we are becoming oversold. So like I said, hopefully that results in some kind of a bottom formation here, at least a correctional bounce upward.
Yeah. Sometimes the fundamentals don't really drive the market, which is frustrating, and hogs would be in that camp. All right.
Yes,
Thanks for joining us. Allison Thompson with the Money Farm, and that's Markets Now.